Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. As the busy week unfolds, investors now look ahead to the US Federal Chairman Jerome Powell's speech at the central bank's conference in Stockholm. Along with that, the next big marker for the markets is the closely watched US Consumer Price Index, also the US CPI, known to the market, due later this week, which could offer more clues on the rate hike path. Forecasts are expected to show inflation slowed further to 6.5% last month from a 7.1% in November. Encouraging data from the US job report last Friday did help the markets in terms of recovering as the dollar sank, with investors optimistic about a soft landing and not a recession. Looking at the Australian dollar though, we can see that the market taking another challenge to that top side, but found resistance, that is, towards the region of 69.45. A key level, because a break there would give further confirmation to this engulfing candle, and if so, could see a rally on towards 71 cents. Unfortunately, we can see here that the market was rejected, and it is somewhat slightly negative due to there is a little bit of divergence here. So do be on your guard in case we have reached a peak, and we could see a pullback towards 68.60 for the start of today, with the base holding around 68.15. The strength of the euro as the dollar index, which measures the greenback strength against a basket of 6 major currencies, slips below 103 and settled at 102.90 in New York, gave momentum for the euro and punches through the resistance of 107.20. Not quite displaying the bullish case to the outside range day, but has confirmed it due to the close above 107.20. I'm a little bit cautious. As we can see back here in May, there was a lot of supply emerging back and sent the trend lower. We don't want to see a repeat of that, so therefore be on your guard. But with that being said, the break of 107.20 has given further upside scope. And along with that, with the dollar closing underneath 103, now looks towards a potential target of around 109 for the euro and maybe down to about 101.60 for the dollar index. But I would like a little bit more evidence to support this case before getting too bullish at the top of the range for the euro and too bearish at the bottom range for the US dollar. The market was a little bit mixed when it comes to the dollar yen as it hovers around the 132 area. Nevertheless, the market is still somewhat negative and therefore looks towards a potential target of 131.5 to around 130.40.60, which was a key event not so long ago after posting a positive or strong hammer that gave us a 3-day rally. Sterling still holding to its gains as it edges higher and now looks towards 122.25 as a potential target that does further scope up towards 124, where we saw the market take a pause and turn around. Nevertheless, I do feel that the market's engulfing candle has supported the market further and therefore looks for further gains in the coming session. The gold, well, the market took a challenge to that topside key level of 1,882 and backed away rather sharply. And from there, there's left a slight negative tone to the start of today. Looking to the downside, the support seen around 1,864, with the next key level somewhere around 1,857.58. There is a little bit of divergence coming through here, as you can see. So therefore, I do expect to see a short-term pullback and see if the market or bargain hunters return around that 56 area. Wrapping up with oil, but the market took a step to that topside key level, which was at 76.20.30 and didn't stay there very long and backed away sharply. Still holding to a negative sentiment, still looks towards a downside test of around 73.5 to 72.5 and the base holding around 71.10.30. Well, that wraps it for the morning. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.